Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzy Bird, and we're an hour away from the opening trade. Here's what you need to know. Herbert Kickl is on track to become Austria's next chancellor, paving the way for the country's first government led by the far-right Freedom Party. Meanwhile, Italy's Giorgia Meloni makes a trip to Mar-a-Lago as SpaceX advances deal talk to provide secure telecommunications for the nation's government. In China, they reaffirmed support for the yuan after a sudden drop in the currency late last week, fanning speculation that policymakers will greenlight a sharper depreciation. And sticking with Asia, Japanese companies voiced concerns about bilateral investments between the U.S. and Japan after President Biden blocked Nippon Steel's proposed purchase of U.S. steel after CFIUS, a national security panel, couldn't form a consensus. Lizzy.
Well, a very good morning, everyone. Checking in on these markets. Happy Monday. We've got futures pointing higher in Europe, not though on the FTSE 100. Do we see a read across from those on-high sales numbers into the European session? You've got the 10-year Treasury yield near the highest since May. This FOMC seeming increasingly hawkish, and we stay on the watch for euro-dollar parity. The countdown to the opening trade starts right now.
Monday morning, good morning. Welcome to the show. First full week, really, you could argue, of 2025, though in reality isn't. Let's talk about what came out of this weekend, because politics and inflation continue to vie for the spotlight right now. And politics, I would argue, maybe dominated this weekend. What became clear is that the right in Europe is on the rise once again, and we've seen more evidence of that this weekend. Kriti was just mentioning it in the headlines. Herbert Kickl's Freedom Party potentially forming a government in Austria. I tell you what, the bigger tell is, look at Giorgia Meloni going to Mar-a-Lago. She is emerging as Europe's most powerful politician on the right, most powerful politician in absolute terms, it seems. But there are risks, and you can see that with Nigel Farage. That's something we need to fold into the message as well this weekend. Do you want to get too close to Trump and to Musk? You've got the Trudeau story emerging out of Canada as well. We'll talk about that narrative in just a moment. So politics absolutely front and centre, guys. Is this setting the template really for 2025? First full week, politics front and centre.
A shift to the right seems to be the common thread throughout all different regions, and all really kind of almost tied to Donald Trump, dare I say. I mean, part of the Canadian fallout came from the question around what the reciprocation from Canada actually looks like towards Donald Trump's policy. A similar story with the UK and Nigel Farage as well.
Yeah, it's kind of, there's been no clear indication why you've had Elon Musk, Trump's attack dog, dropping his support for Nigel Farage. But is it a coincidence that you've got Keir Starmer sending his chancellor to Beijing this week when you think about Musk's attacks on the left of politics in the UK? There seem to be clearer indications there what's going on.
It's really tricky to discern exactly what is happening more broadly, but I think Kriti's right in terms of the narrative that we are seeing emerging. The right is on the march in Europe. You can see that certainly in Austria. Giorgia Meloni clearly is emerging as the most powerful politician in Europe right now. She's got the ear of Musk, and she's got the ear, critically, of Donald Trump. They had dinner together. They went to the cinema together. They saw a movie together.
So did Farage.
I agree. He's been there first. But she is emerging as this incredibly strong force. And that dinner came with a side of Starlink as well, which was really important too, just keeping the Musk story on board. But Farage is an interesting indicator. It can go wrong. And I think all Europe's politicians on the right are going to be watching that relationship with Farage very, very carefully. It's really difficult to determine at the moment what Trump's agenda is going to be. Everybody's vying for influence.
And you're seeing a lot of these G10 world leaders. Their governments are just kind of falling apart. The fact that you are seeing Meloni emerge as kind of the leadership of Europe, that really says something about Europe. The fact that Canada is kind of falling apart. South Korea has its own issues. These kind of pillars of stability in the world not so stable anymore.
Well, you mentioned Canada. You've had the loonie rising off the back of this report that Trudeau's going to stand down. Staying with that currency theme, the yuan, we've got to talk about it. The PBOC maintaining support for it after that sudden drop in the currency late last week. It comes back to Donald Trump in a way, because this is the PBOC basically saying, do not short the yuan ahead of his inauguration.
There's a number of different aspects of this story as well. Clearly, the pressure is mounting in terms of keeping that fixing where it is right now, and the pressure is going to mount. We saw the move through 7:30 on Friday. But you've got to think about the other side of this as well, which is what is happening with the euro. So as the Chinese look to defend their position against the dollar, the euro's been weakening, which basically has meant that you've seen this situation where the Chinese yuan has been gaining strength against the euro. So the euro has been weakening against the Chinese currency at a time when Europe's already still struggling on the global stage. Imagine if they let it go, if they let the peg go, if they let the fixing go against the dollar, the euro is going to appreciate against the yuan, which is going to make life even harder for European industrials competing in China. Another headwind potentially emerging for Europe.
And China has a little bit of burden of proof here as well. I mean, to your point, they're trying to keep their monetary policy relatively loose. They're trying to kind of almost bring back in that deflationary narrative that you have when so many European countries, especially, and we heard Klaus Knot talking about this, I want to say 2 weeks ago or so, when he was saying that there is a worry that you are starting to see Europe import deflation from China, which I thought was a narrative we got rid of, say, 6 months ago.
But the worry there is that basically if you can't get it into the States, you get the goods into Europe and you have to discount them even more, so you get an even greater deflationary impulse coming through. And if the Chinese currency is weakening even more against the euro, then, reversing what we've got now, then potentially that's going to make life, that trade even easier for the Chinese potentially to push through. You want to talk about Nippon Steel?
I want to talk about Nippon Steel because I do actually think it's all connected, even though this is, of course, very much a Japanese story. The China concerns, at least for the United States and for Europe, there's so much of national security baked into it. And Joe Biden has made a pretty controversial statement, although fairly expected, in his blocking of Nippon Steel and that proposed takeover for U.S. Steel. But the reason this matters is because this week you also have appeal hearings from TikTok in the Supreme Court. And the common thread here comes, again, with what we were talking about with the politics, the story of if you start to see this America First agenda from Donald Trump, but also, as shown, from Joe Biden as well, what are the repercussions of it? And I think the story over the weekend in terms of Nippon Steel has been the reports that his inner circle, Janet Yellen, Rahm Emanuel, are starting to say, well, if Japan is the largest investor in the United States, is there some sort of retaliation coming? The Japanese Prime Minister made that comment this well.
In what form would that come?
Well, it could be coming in buying of treasuries. It could be coming in other proposed
selling
deals.
Selling of treasuries or buying of treasuries?
Excuse me, selling of... Well, both, right? I mean, there is this kind of assumption that Japan and China buy a lot of these treasuries. Japan still owns more treasuries than China does on the world scale. There's also a question of defense as well. In the absence of stability in South Korea, you're trying to deal with the South China Sea. You have the Taiwan question. Japan is that key ally. And already you've heard comments from Japan saying, well, if you're putting us in the same category as China, is that a problem?
Yeah, there's a question of who's going to show up for Japan at Trump's inauguration, which is the same question, as it happens, for the UK. So tying it all together there, let's see on January the 20th.
Let's see also what comes out of this China trip that the UK is about to make. Rachel Reeves is going there at the back end of this week?
Nothing much seems to come out of these events that happened in 2024. Let's see if it's any different in 2025.
OK, what have we got? Let's talk about the show ahead. Then we're going to talk about the week ahead as well. Yael Selfin, KPMG's chief economist, is going to be joining us. We need to talk about the UK there as well, her take on what is happening. Karen Chadid, BlackRock EMEA investment strategy head, joining us as well. How do you diversify your portfolio and what role are bonds going to play as a diversifier this year? Peter Trubowitz is going to be joining us, London School of Economics, Phelan US Centre Director. Fascinating conversation in store there, looking at what is happening with US politics. How much do we know? How quickly are we going to know about the Trump agenda come the inauguration later this month, Lizzy?
Well, as you say, Guy, it's properly back to school this week, and here's what to watch out for. Today we've got German inflation numbers. Tomorrow we get France, Italy and Eurozone inflation numbers. On Wednesday it's the latest FOMC minutes, as I say, leaning a little hawkish, it seems. And on Thursday we get the Chinese PPI and CPI numbers, and of course former US President Jimmy Carter's funeral. So the US closed on Thursday. Then Friday, US non-farm payrolls. And for Bloomberg Economics, this could be the indicator that US exceptionalism is alive and well in 2025.
The data are consistently strong at the moment. I say consistently strong. They're broadly strong coming out of the United States. I think it would take a really weak number Friday to really throw the market off course at the moment. This idea, this strengthening, this higher yield that we've had in the US 10-year, I think it would take a really big number on the downside to maybe shake that belief around 450 that we have at the moment, potentially pushing up towards 5. The strength in the US economy seems to be the clear narrative right now. Payrolls, after the claims numbers that we've had recently, would seem to confirm that.
I read some really interesting research over the weekend that we are, to your point, looking at 461 on the 10-year at the moment, but that maybe the payrolls number, if you are starting to talk about inflation upticks and pricing in the inflation expectations into 2025, post-Trump, et cetera, supply chain shocks, all of that, maybe the way the payrolls pricing comes up is further out into the curve, into the 30-year and into even, say, the 20-year, for example, which isn't one that's often traded, but that is no longer the driving force on the 10-year in the face of the inflation story, the tariff story, the deficit story as well.
Higher US 30-year yield, higher US 20-year yield, higher US steeper curve, basically.
Yeah.
Seems to be the story. OK, let's push it on. What else do you need to know this morning? Let's bring you some other news. South Korean officials have asked the police to execute a warrant that has been issued for the arrest of President Yoon Suk-yeol. The warrant is set to expire at the end of today. An initial attempt to arrest Yoon last week was unsuccessful and led to a standoff with his security team and thousands of supporters of the president. It is still unclear when or if that second arrest attempt may happen. Russia's defense ministry says forces have repelled what appears to be a fresh Ukrainian offensive in the border region of Kursk. Ukraine first seized Russian territory in the region back in August in a move that caught Moscow by surprise. Russia has claimed about half of that territory back, and US officials say that it could regain the rest within a matter of months. And UK business confidence has dropped to its lowest level since former Prime Minister Liz Truss's mini-budget more than 2 years ago. According to a survey by the British Chamber of Commerce, a majority of firms expect prices to increase over the next 3 months as they pass on higher taxes and another jump in the minimum wage. The lobby says business conditions are, quote, weak, and more firms have slowed investment than accelerated over the past 3 months, which is not exactly great in a country that probably needs a pickup in productivity. You want investment.
Yeah, but how much is that the business group's fault for not actually standing up to the government before that budget in October?
But the government turned around and said, we're all good, we're all on the same page. That was the message coming into the election, wasn't it?
It was, but it was blatantly obvious to many commentators that there were going to be tax rises in this budget and that they were going to land on business.
The next survey caught everybody by surprise. Very few in business, certainly people I was talking to, were expecting that rise in national insurance contributions. That caught a lot of people on the hop.
But lo and behold, it is a theme that the UK business lobby groups tend to have recently been trying to prioritise getting in with the government over being strong about the message. And then you have to ask, why would anyone be paying their subscription fees? And they're battling for members at this point. So shouldn't that embolden them? They seem to be doing it post-budget.
Yep.
This is such a common theme that you're seeing on, especially now that it's showing up in the data. We talked about this narrative for such a long time, this kind of doom loop that we're seeing in Europe as well. It showed up in the French numbers, it's showing up in the UK numbers, and these business confidence surveys week after week in a way that they didn't a couple of months ago. We were kind of in anticipation of it. Now you're actually seeing evidence that this is showing up.
It's amazing. I think what it demonstrates is the line between politics and economics. I think this is where it is showing up, and you can see this around the world. You're seeing it obviously quite clearly in the United States, but you're seeing it clearly here in the UK. Business leaders, economics sort of professionals, everybody's trying to understand what the politics are, because that is where, and unlike the last few years, that is where the agenda is coming from in terms of what may drive economics and, by extension, maybe markets as well. And so we're in for a bumpier ride, because politics by nature is more of a volatile business. So I think that's maybe the takeaway from this.
US, China, France, Germany, UK, all of them struggling with that connection. Coming up on the show, chip maker Hanai reports a sales beat. We're going to check in on the European chip makers and the read-through there at the Open. Plus, we'll get the latest out of Canada as the world looks for news on Justin Trudeau's future. But up next is back to the markets. Fed speakers say the inflation fight is not over. As we were just discussing, we're already bleeding into some of the data. If you have any questions of your own, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Obviously, our job is not done. We're not at 2% yet. So we're definitely aiming still to get there, and we know the job is not done.
Okay. Adriana Kugler, talking there about the fact that the fight against inflation is not over the weekend in a panel discussion. Obviously, that sets up this narrative that the Fed really isn't convinced about what the go-forward is from here. We're all trying to understand whether or not the Fed in reality is going to deliver more cuts this year, or whether that Kugler narrative that we're not done just yet is probably in the ascendancy. Valerie's here to talk us through what we are hearing, what the message is. Voters have changed. Is the message the same, Valerie?
We have had a recent bout of Fed speak that does mirror that hawkish language we heard from Powell last December, that Adriana Kugler we heard from on Saturday. She also said that we need to ensure that the recent bump in inflation isn't persistent. Mary Daly also over the weekend saying inflation is uncomfortably above our target. Barkin on Friday talked about the upside risk to inflation. He also talked about the upside risk to growth. And those two things, Guy, are rattling the Treasury market, especially when it comes to the long end. We've seen 30-year yields rise now above the 2024 highs. That 30-year yield at 4.83. The 10-year yield isn't far behind when it comes to beating those 2024 highs. What could push Treasury yields even further is more hot economic data. We had the ISM manufacturing on Friday. That boosted Treasury yields. But again, if we look ahead to this week, on Tuesday, we get the JOLTS data along with ISM services. Wednesday, we get those Fed minutes. Watch out for any more hawkish narrative coming out of that. Thursday, the markets are shut for Jimmy Carter's funeral. Friday is the big one with non-farm payrolls. Now, that's the setup when it comes to the U.S. We have here in Europe, we get a slate of European inflation readings, starting with Germany today at 1 p.m. We are due to see a uptick in most inflation readings year on year due to some base effects with fuel prices. However, the long-term trend of disinflation is still on track in many economists' mind.
The picture on either side of the Atlantic, Valerie, just looks so starkly different right now. We'll come back to Valerie a little bit later on. It's a nice note from Torsten Slock I read back end of last week. There are significant upsides risks to US growth, inflation and interest rates as we enter 2025. That's the view from Apollo. The view from the British Chamber of Commerce tells a maybe different narrative about the economy in Britain. Business confidence dropping to its lowest level since former Prime Minister Liz Truss's mini-budget. We're joined now by KPMG's UK Chief Economist Yael Selfin. Good morning.
Good morning.
Why are we so downbeat? Should we be so downbeat in this country? Why is business feeling bad?
Well, we've had an increase in cost for business. Some of it wasn't expected. So we've got the tax hike, but we've also have slightly higher energy prices as well. So overall, businesses are unsure about what the longer-term plans for governments are, because we haven't seen the full industrial strategy, if you like, and at the same time, they're seeing the cost rising more than what they had anticipated before the budget.
All of that's true, but at the same time, you're talking about the idea that actually in the near term, we could see a bit of a sugar rush for the UK economy. But that comes out of the consumer rather than business.
Well, it mainly comes out of government spending that is going to be stronger, and also consumer spending, as you say, because consumers are going to see wages still higher than inflation, so they're going to have their purchasing power increase, and therefore we expect their spending to rise and be relatively resilient next year. So the combination of stronger government spending and stronger consumer spending should sustain relatively strong growth this year.
Yael, I want to talk about the trade narrative as well. We talk about it so much with the United States and with Europe. There was an argument, I believe Jordan Rochester out of Mizuho had made this in the context of the currency market, that with the extra pressure on China, the UK could actually benefit. Simply, one, because it may be a little bit more insulated relative to its peers, but also that it could attract some more kind of trade flows. How are you thinking about the China question?
Well, I mean, I think trade is generally a good topic to think about at the moment, because we are expecting quite a lot of uncertainty around trade. But generally, we think that you're likely to see less friction than otherwise, just because the cost will be primarily borne by the US. And therefore, we'll probably see a little bit less. So who is going to win, who's going to lose? Europe potentially could win a little bit in the sense that some of the trade will be diverted from China, and within that, UK has a role to play and could capture some of it. But in order to capture that, you will still need to be ahead in terms of technology, in terms of know-how. And we're not necessarily there. We're going back to the business environment, to investment, and whether we can be the leaders in center technologies that will be able to capture some of the Chinese market.
It sounds like you're saying that basically the UK doesn't have the infrastructure to maybe even compete when that opening exists or will exist, when these trade tariffs get worse and worse. What does it need to get there?
Some of it is infrastructure, some of it is still trade. It's our relationship with Europe, for example, when it comes to trade, is not as defined and not what it used to be before. Yeah. So trying to open up trade, facilitate trade between UK and Europe is important. We had that theme earlier on last year. I think this is important, and UK government is trying to do something about it potentially, but maybe not enough at this stage.
Where you talk about the sugar rush, the government giveaways, I wonder how inflationary you think they'll actually be, because it's interesting, you see the Bank of England cutting more than the market this year, I think.
Yes, I mean, it's a very interesting question in the sense that one of the things that worries me at the moment is that I'm hearing more inflationary talk from businesses than potentially you would want to see given the forecast at the moment. Yeah, so I think there's definitely, at least in terms of talk, businesses are talking about raising prices by more than what inflation of between 2 and 3% would allow. How much of it they'll actually go ahead and do will depend on how strong the economy is, and ultimately how much they judge they want to potentially capture market or push prices. I think this is one of the risks, that we will see higher inflation.
That's interesting. So maybe that BCC survey is just empty threats from business about what they're going to do off the back of the tax rises in the budget.
But they are, so the BCC story does talk about the fact that they're talking about raising prices. They do expect to raise prices. They're downbeat, but they are anticipating that they're going to push prices higher.
But will they actually, is the question.
That's
I think Yale's
understanding
raising.
the reaction function is difficult.
But the other question is, so when you look at it from the consumer perspective, how much better off will people actually feel by the end of 2025, right? Because that's the question for politicians. And then, is it inevitable that you'll actually get more tax rises in the spring budget, if there's a budget or an event, given the GDP outlook? Is that what you're expecting and factoring into your models?
Okay, so on the inflation side and on the consumers, ultimately, wages are likely to go up by more than inflation. So purchasing power will still increase, and we are expecting interest rates to be lower. And also, even with the current level of interest rates, when people remortgage, they will capture some of the previous decline in rates. So consumers overall will be better off. That's one thing. On the fiscal side, I'm not expecting any change in the spring. I think the Chancellor will try and hold off. I think it is wise because you can't just change policy every time OBR forecasts change. You need some stability, and you need a longer-term vision as to where public finances are going. It's unfortunate that the margins that she has to play with is very small, but she needs to look beyond that. So therefore, I'm not expecting a change. I'm definitely not expecting a rise in taxation come spring, probably not even in the autumn. I think she will still have some time. Yeah. Whether she'll have time in 2 years' time or whether she'll need to have a little bit more money coming in, that's another question.
All right. Yale Selfin, chief economist over at KPMG UK, joining us around the table this morning. We thank you so much. Coming up on the program, reports that the Canadian Prime Minister could resign this week. We're going to look at the pressure facing Justin Trudeau from within his own Liberal Party. That conversation next. This is Bloomberg.
Monday morning, good morning. 30 minutes to go until the start of trading here in Europe. When it comes to equities, this is the picture you find yourself with. US futures a little bit higher. European futures a little higher than that. As you can see, we're up by around 0.6%. It was a decent close in the US Friday. A little of that needs to be factored into the thinking this Monday morning here in Europe. The bond markets just opened. Let's see what we've got in terms of trading this morning. As anticipated, yields are tracking a little higher. Keep an eye on what's happening in the United States. The message certainly from Fed officials over the weekend was inflation, well, we're not quite done with that just yet. But before we dig further into the inflation story, take ourselves a little further north.
Yes, to the politics. Canada's Globe and Mail saying that the Prime Minister, Justin Trudeau, is expected to announce his resignation as soon as this week. And we can get more now with Bloomberg's Katya Dmitrieva. Katya, as we ask whether Trudeau can last and how long, just walk us through the challenges he's been facing that led to this point.
Yeah, and it's looking less and less likely as sort of the day goes on here, because it was the Globe and Mail who reported that he's likely to step down this week. Reuters reported just after that he's actually likely to resign even before Wednesday. Wednesday is when members of his party hold their caucus. And so a lot of the issues that have come up in the past couple of months have really been triggered by things like the housing market, sort of these sky-high home prices that really have consumers suffering, and especially after this period of inflation that surged after the COVID pandemic, really impacted a lot of developed countries, and Canada was among them. You also have a leader in Trudeau who's been in place for nearly a decade. But I think most recently, the thing that really triggered at least the most recent pushback from within his own party is the leaving of his finance minister, Chrystia Freeland, who resigned very publicly, published an open letter to Canadians saying that basically what she wanted, what Trudeau wanted, was completely at odds. And she's actually now one of two main people that have come up in conversations that our reporters in Canada have had as potentially names for new leadership. So a lot of sort of questions going forward, but that's kind of where we stand at the moment.
Well, Katya, it feels like Chrystia Freeland very publicly and very famously was questioning the approach, Canada's approach towards Donald Trump and those tariffs. How much of that is not only the root of this potential resignation, but may be kind of an overhang going into 2025?
Yeah, the fiscal policy issues were one of them, as she noted in her address to Canadians. But of course, Trump is playing a major role, and really, like, things came to a head essentially after he was elected, and now we're about 2 weeks away from inauguration. So these issues are going to keep coming up. But when he promised tariffs on Canada and on Mexico, that was a big breaking point, and it was very soon after that she broke from the party, publishing that letter. And a big reason for that was that Trudeau had sort of gone back to the drawing board and was said to be thinking about electing Mark Carney to be sort of his representative in dealing with Trump and politically. And so a lot of the tariff issue, the issue of inflation, and how that could exacerbate inflation and price pressures everywhere across the economy, as well as the political tensions, really drove this schism. And really before Wednesday, we should see a bit more movement on that. I mean, you have to remember that people from his own party, there's something like 24 MPs, Liberal MPs, who have come out publicly against Trudeau, in addition to, in private conversations, dozens more. And so this leaves him in a pretty vulnerable spot.
All right, Katya Dmitrieva, we thank you so much. And we should just mention very quickly that Mark Carney, of course, the former Bank of Canada, I believe Bank of England governor as well, is also the chairman of our parent company, Bloomberg LP. Let's continue the politics conversation as well. Austria's anti-immigrant Freedom Party is creeping closer to appointing its first chancellor after receiving an invitation by the nation's president to discuss forming a government. The development comes after efforts to form a centrist coalition collapsed. Let's get more of Bloomberg's Oliver Crook. Ollie, what are we hearing from Vienna?
Yeah, listen, Kriti, this is really sort of an interesting thing, an interesting development in Austria. This is an election that was held back in September, and one that has been basically not been able to form a government since then. So you had the chancellor that was really sort of in a caretaker capacity. The sort of winner of that election was the far-right Freedom Party, Herbert Kickl, but basically was not given a mandate to form a government because, like in many other countries across Europe, the far-right basically firewalled out of the mainstream politicians. No party would enter into coalition with them. So you went into these long agreements, these long discussions between the center-right, the center-left, and the Liberals that have been going on since September. And over the weekend, the Liberals pulled the plug on those discussions. That basically brought this whole situation to a head. It made that the chancellor would step down also as the head of the party. And that left Austria politically in a very sort of confused position. What would happen next? Would there be another election, or will there be, as we are now seeing, likely the outcome is that maybe he will be given a mandate to form a government, because now the interim head of the Conservative Party, Party has come in and basically softened, potentially opening the door to going into government with the far right. If this sounds familiar, what's going on in Austria, it's because it is exactly what is going on in France. It is very similar to what is going on in Germany. It is similar to what we saw going on in the Netherlands, where basically you have these sort of governments that are formed in coalitions, slapdash, basically only unified to block out the far right, which is becoming harder and harder to do, particularly at a time when you have very, very slow growth. You have the budget. Budget is also a major issue in Austria. You see that they have to plug a major budget deficit, find a lot of money, and that is causing economic, it is causing political paralysis, and it is not just in Austria. It is exactly the same movie that we're seeing play out all across Europe.
Ollie, we talked about this at the beginning of the show and its influence, and the influence we're seeing growing for the right. And look at Maloney going and having dinner with Donald Trump at Mar-a-Lago. Elon Musk seems to be playing a critical role in this, but you're getting mixed messages. He's clearly pushing this right-leaning agenda, but Nigel Farage is learning that it can be a difficult relationship to navigate.
Yeah, and I think that this is something that we're going to probably see develop among many of these sort of far-right parties that have never really had any actual power in politics. And as you get closer to power, you know, the sort of fractures and the realities of trying to actually govern become clearer and clearer, and disagreements become, you know, you turn on yourself. So it's very interesting when Elon Musk sort of came out and supported the AfD a couple of months ago, kind of really out of the blue, and it's really shocked the political establishment within Germany. I mean, we've had all the party leaders basically kind of revolted by this. I mean, most recently, Scholz over the weekend saying that Germany is governed by the will of its citizens and not the erratic statements of a billionaire from the United States. What I think is interesting is that he will also be holding an X space, Elon Musk, and speaking with Alice Weidel, the head of the AfD, the far right in Germany, on Thursday, sort of potentially adopting some of the sort of techniques that were successful for the Trump presidency, you know, the sort of podcast format, the Joe Rogan format, going and talking. And what I think is interesting is we reached out to the AfD to really understand how they sort of see this relationship and the support from Elon Musk, and we heard back from their spokesman saying, in view of Elon Musk's outstanding role in the coming Trump administration, we also believe it is important for the German-American relationship if the AfD, as a significant political force, can build diplomatic bridges. So they are saying this very, very explicitly. Not only is this helpful for the AfD because it gives them potentially more credibility from a business perspective, from an economic plan, because Elon Musk is obviously known for his sort of acumen in business, but also because they see it as a direct line into building a relationship with Donald Trump. There are, of course, some contradictions in there, Guy, because the AfD, one of their main platforms, is they're very resistant to the influence that America has had in European politics, very resistant to the influence that America has had within Germany. Obviously, they feel a little bit differently for that when it comes in their support, but also in their sort of local chapters in Brandenburg, standing in opposition to the Tesla factory there. So I think this is a really very interesting moment here for European politics, and it'll be very interesting to see how it plays out. And I'm sure a lot of people will be watching that discussion between Alice Weidel and Elon Musk on Thursday evening.
Absolutely. Ollie, it's getting interesting, isn't it? Ollie Crook joining us on European politics. Let's turn to another kind of sidebar part of this story. Bloomberg understands that Italy is in advanced talks with SpaceX for a deal to provide secure telecoms for the government. Let's bring in Bloomberg's Milan bureau chief, Tommaso Ebhardt. Tommaso, what do we know about this, considering we've just seen Maloney at in Mar-a-Lago?
Hi, good morning. Yes, it's quite interesting. We know that SpaceX, Starlink actually have been discussing with the Italian government for months to provide secure telecommunication via its satellite. It looks like, and this is our scoop from last night, that after Maloney met with Trump during the weekend, talks are advancing. We are talking here about a 1.5 billion euro contract for the next 5 years to provide with the Starlink, the Italian government with secure and encrypted services for the government. As far as what we know, the deal has already been approved by the Italian Defense Ministry and also by the Italian Intelligence Service. So it looks like talks are advanced. They are not being finalized, but clearly, you know, the fact that we are hearing that talks are moving soon after Maloney came back from the US is quite interesting.
I'm happy to see Lucia Prada over your shoulder there, Tommaso, but just tell us, what's been the reaction in Italy to this deal?
I mean, our scoop today is on the front page of every Italian paper. Some of them are saying that, you know, a potential deal between Elon Musk and Meloni for the telecom service is a consequence of closer ties between Italy and the new U.S. administration. The opposition newspaper obviously are saying that business is coming into politics, and so those special relations between Musk, Trump, and Meloni could play a higher role in the Italian political arena in the coming days. Clearly, the Meloni move over the weekend was a surprise move. Italian papers today are also saying that not everyone in her government coalition was aware that Meloni was going to meet Trump over the weekend. So there's quite interesting development. And just remember that U.S. President Joe Biden is coming to Rome in the next few days to meet the Pope, to meet also Meloni in his what could be his last overseas trip.
Tommaso, speaking of that kind of last overseas trip, there's a conversation at the moment that the leadership in Europe, at the end of the day, in the absence of Emmanuel Macron, in the absence of Olaf Scholz, even in the absence of Keir Starmer, is actually Giorgia Meloni, especially when it comes to representing Europe to the United States. Your take?
First of all, that's what somehow even Trump tried to say over the weekend, commenting the Meloni visit. I will tell our readers to follow Bloomberg, because clearly we are Bloomberg News, because clearly we are going to try and see if that's really the case. For sure, what is a certainty at the moment that Italy seems, and it's quite different from the past, to be one of the more stable countries in Europe. And Giorgia Meloni managed to have dinner with the incoming U.S. president over the weekend. So there are some signs that Meloni could play a pivotal role in the next, in the next year as one of the most crucial European leaders when discussing the relationship with the U.S. for sure.
It's a fascinating one, and you mentioned that key point of stability in Europe and Italy representing that beacon. I believe when Matteo Renzi, the former prime minister, came on this very show, even he was surprised that Italy played that role. Bloomberg's Milan bureau chief Tommaso Ebhardt joining us on the program this morning. Well, he kind of said it there. There is still also this question of Elon Musk kind of hanging over everything as well, specifically with the SpaceX deal at a time when telecoms in Italy are already dealing with so much private investment, the likes of KKR, the likes of Vodafone as well, and now Elon Musk kind of getting involved.
Yeah, that's one angle. I mean, you were talking about how fickle the support of Elon Musk is. For me, the big question is who's going to be the Trump whisperer for the UK? If you've got Peter Mandelson as the UK ambassador to Washington, and of course he's a former Blairite, I kind of wonder what Tony Blair's making of all of it. He probably thinks he would have been cool enough to woo Elon Musk when he actually wants to throw Musk a bone when it comes to AI.
Starmer's finally getting a break, with Farage catching a little bit of the downside of the Musk trade. So that's got to be good news for Starmer. But Farage is demonstrating that fickleness. And this is the problem I think Europe is going to have to navigate is how do you deal with the personalities of Trump and Musk?
Yeah.
And how fragile are their egos, how fragile are their views, how fragile are their aspirations in terms of how all of this is going to fit together. And Europe hasn't clearly got a handle on it. I don't think anybody's got a handle on this. I think Washington is still struggling to get a handle on this. And nobody likes uncertainty. And there's a lot of it around at the moment. And even within the space of election to inauguration, the curve that Farage is going on is just the arc that is amazing to watch.
This is where, to your point, the danger lies, right? Because there are now market consequences and investment consequences from breaking that relationship. We talked about it from Tesla. We talked about it in the context of a telecommunication network for the entire country of Italy, tied to his company. We saw this on his his voice on Ukraine and Russia with Starlink and the access to that kind of defense story. Certainly something we're going to be talking about quite a bit, I imagine, in the coming years. Coming up on this program, European chip stocks in focus at the open today after On High, the world's largest maker of iPhones, reported a boost in demand for AI infrastructure. That conversation next. This is Bloomberg.
Welcome back. 11 minutes to go until the start of equity trading here in Europe. Let's talk about what is moving markets around the world right now. Weirdly, the yen is down, which is slightly odd considering what we've been getting from Ueda overnight. The boss of the BOJ, maybe sounding a little bit more hawkish. Let's try and square this circle. Ven Ram, Bloomberg MLIV cross-asset strategist, joining us now. Ven, good morning. Why is dollar-yen higher?
Morning, Guy. Well, as you mentioned, the Bank of Japan Governor Ueda mentioned that, the BOJ would raise its policy rate if the economy continues to improve. But he didn't outline an exact timing. But, I would refer you back to his comments last month where he said that, quote unquote, it will take a long time before the big picture is fully clear, both on the spring wage negotiations and the Trump administration policies. Those kind of comments suggest that the rate hike is more likely in March than this month, which is why we are seeing the yen getting hammered a bit today. And it'll get dragged lower in the remainder of the month as I see it. Look, make no mistake, the yen is extremely cheap, whether you look at the real effective exchange rate or any other yardstick, but it still needs a catalyst to push it higher. And mind you, by being long the yen, a portfolio is implicitly exposed to a negative carry of more than 4% annually against the dollar. And if the BOJ continues to drag its feet, and if it's tentative in its approach as to the timing, and if it goes at a glacial pace, where last year we just got 35 basis points of rate increases, if we see that kind of pace, it's just not going to do anything to the yen, which is why the yen is not picking up the cues, the hawkish cues, Guy.
And then let's go from the yen to the yuan, because you saw the PBOC reinforcing its yuan support. So what's your outlook for the yuan?
Well, the PBOC said the yuan fixing slightly stronger, which wasn't surprising coming after the currency's drop below 730 against the dollar last week. The message from the PBOC, Lizzy, is one that the policymakers aren't panicking and any weakness in the currency will be gradual. The gradual word is something they're very keen on. Even so, I think that there is a big risk that the PBOC will devalue the yuan at some point this year, like it did in August 2015, when it depreciated the currency by nearly 4% in 2 stages. And I think such a one-off devaluation will send ripples through the markets. And this is a scenario that the traders are underpricing, and it is distinctly a warning for 2025.
Ven, talk to us a little bit about that 2025 story. How much of what the PBOC, the BOJ does ultimately comes down to the Federal Reserve?
Well, we heard over the weekend from the Fed speakers that the inflation job isn't done. So it's not a surprise that the markets are pricing in just less than 2 rate cuts by the end of the year. In September, it was as though the Fed was challenging the markets to prove why it shouldn't cut rates. But now it is asking why it should continue cutting rates in an environment where the core PCE is closer to 3% than to 2%. So, which is why we have seen Treasury yields are surging higher as we speak.
Yep, 461 on that 10-year yield. Ven Ram from Bloomberg's MLive team, we thank you so much. You get up-to-date analysis from him and the team. Just type in MLIV Go on your Bloomberg terminal. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we're going to be watching the chip stocks today after a couple of bits of positive news. Firstly, that big announcement from Microsoft on Friday saying they're going to be spending around $80 billion on data centers in the year ahead, because that could potentially boost some of the names we see on the screen there. And we also had better than expected sales from Honhai, the company that actually assembles iPhones, and also some products for NVIDIA. So both of those potentially positive today. These are the stocks that we saw in Asia really rallying, particularly SK Hynix, also Samsung and TSMC had an almost 5% gain. So potentially we're going to see that flowing through into Europe today. Then in terms of drink stocks, we saw big declines on Friday after the US Surgeon General warned that potentially they might need to put more warning labels on alcoholic drinks due to the potential link to increased cancer risk. All of these stocks fell on Friday. Campari, Diageo, AB InBev, and analysts over at Jefferies today saying that people are going to be taking a shoot first, ask questions later approach to these stocks for now in terms of that extra risk coming in. We'll see if they rebound or continue to decline later today. Then in terms of ratings, it's a massive day in terms of research. All the analysts and traders coming back following their holidays. One that stands out to me is RBC. We've got a downgrade for that one in terms of Unilever. RBC analysts cutting Unilever, and they give it a 4,000 pence price target. We can see about 500 pence below where it closed. It's an underperform rating on that one. A couple of others that stood out for me this morning. There was too much to get through. We had our work cut out, but we've got Rolls-Royce cut to neutral at Citi. Meds in luxury as a buy at Stifel. And Ocado, the woes set to continue there, a street low price target. Morgan Stanley, keep an eye on all those rating changes later in Europe.
All right, Joe Easton with our stocks to watch. We thank you. And if we look at a broader picture, you're looking at European futures higher on Euro Stoxx 50, 0.6%, but FTSE 100 futures pointing to the downside. Maybe that speaks to the lack of tech on the FTSE. We heard Joe talking about the read across potentially from those Hon Hai numbers boosting the likes of ASML at the open.
Keep an eye on what's happening with China as well. The iron ore story has been quite interesting. Feed the commodities into the London market. That could be interesting. We did see a little bit of movement in Shell, BP, etc. Friday. Be interesting to see how that all works its way through. Iron ore is down again today, so some of those mining stocks, I think iron ore out in Asia was down by over 1%. So that just adds to the losses that we've been seeing coming through recently. Politics, though, absolutely front and centre for these markets. Markets don't like uncertainty. Plenty of it about right now. That's what the futures pictures looks like. The Open is next. This is Bloomberg. Monday morning, good morning. We're waiting for European stocks to open. They're about to do that. They're probably going to open on the upside. The London market looks like it's going to be a bit of a laggard. The reason for that upside is we've got to close this gap. European markets close here, the white line. US markets close up there. It was a decent session Friday for US markets, as a result of which a little bit that needs to be priced in this morning. My question is what happens after that, and I think that's going to be interesting. We're about to get some PMI data from around Europe. We've got inflation data coming through. We've got obviously quite a lot of US data towards the back end of the week. But anyway, that's the near-term story. That's what we've got to factor in over the next few minutes. Lizzy, is it showing up in futures?
It is. Optimism for Euro Stoxx 50 futures, higher 0.7% as we get towards the open, but not so for FTSE 100 futures. In the red, flat to the downside as we get towards there. Contrast that with the picture for the France stock market, higher 0.7%. Is this difference because of the China story? How much of it is to do with those Hon Hai results, Kriti?
Well, imagine that's certainly going to show up in some of the European chip makers, like the likes of Infineon, for example, ASML, among many, many others coming up. There's also a story of massive AI investment coming out of Microsoft as well. $80 billion dollars into fiscal 2025. How much of that is spent on that chip story I'm going to say this right, including data centers, labor, et cetera, et cetera. It's all AI investment that likely show up in the market pricing as well. You've got the drink makers as well to keep an eye on. You'd have the U.S. Surgeon General over in the States issuing a cancer warning that alcohol may actually be related in some way. That, of course, already showing up some of those Asian liquor stocks. It may show up as some of the drink makers here in Europe as well. And then lastly, we do have Alstom. They're coming out with their earnings story as well, reporting a third quarter total large orders at around $2 billion. Guy, we're going to see if that shows up at the open.
We're about to find out. It is time for the opening trade this Monday morning. First full-ish week of trading around the world in 2025. So let's show you some numbers. Let's get an idea of what is going on. FTSE 100, as Lizzy's been indicating, a little soft out of the gate. We're down by 0.1%. It's not a big move to the downside, but I think it's the relative trade to other European markets that will be important here. You can already see the IBEX up by 0.3%. The Stock 600, we'll wait for the other markets to come through. At this point, up by 0.1%. We'll see whether it gains a little bit of steam once we start to get an opening trade coming through in the CAC Iran to the DAX. We get more trades opening up there. CAC Iran's up by 0.4%. We'll see what happens with the DAX. We'll see what happens with the SMI as well. But a little bit of a closing of the gap with the US trade Friday, plus also a few little interesting stock stories that are floating around. What is happening in the drinks industry? What is happening in the chips industry? All relevant for the start of trading here in Europe this morning, Kriti.
And it's already showing up in some of those early trades. When you look at their top index contributors to the Stock 600, your likes of ASML, Schneider Electric, SAP over in Germany as well, even ASM, are all trading higher and contributing pretty significantly to the gains that you're seeing in the Stock 600. A pretty broadly positive day. When you look at the downside, though, a lot of it is kind of focused into the healthcare story. So the downside, Lizzy, I'm looking at Novo Nordisk, AstraZeneca, and a couple of others in the healthcare space. But it seems to be a tech versus healthcare story this morning.
Yeah, we also had Joe flagging to us Unilever. That is down 0.8%. RBC having downgraded the stock. It said its outperformance seemed excessive, and indeed you were seeing traders reacting to that this morning. You mentioned the drinks as well. Humi Cointreau up 0.6%, should we call it. You had seen alcohol-making stocks declining in Asia after that US cancer warning that you mentioned as well. But really, it is the tech names that we are lacking in London that are boosting the European benchmark.
And you mentioned the drink story. Diageo, we should point out, down about 0.6%.
So Diageo is down, but if you take a look at the back end of the Friday session, actually that's when the real drop came. So on a two-day basis, this stock is down by 4.5%. This morning it's down by 0.7%. So the big drop came. The interesting thing is we're not getting, initially it looked like we were going to get a little bit of a bounce off the close Friday. That has now reversed, tracking lower this morning. So Diageo down by 4.5%. We're also looking for some data to drop at the moment. Still don't see it. Spanish data dropping actually at 8.15. So we'll wait and see what the PMIs deliver at that point. But it's interesting. It's definitely tech and luxury driving things higher. Banks having a reasonably good day as well. UBS is tracking higher. BNP is tracking higher. Shell is also moving up by another 0.3%. Kriti.
And we should mention that UBS seeing quite a bit of volume as well. I believe the shares rose on Friday.
Yep.
That one coming off of a major upgrade because some of that party continues today, at least in terms of volume. Let's get a little bit more market perspective here. Kareem Shadid, EMEA Investment Strategy Head over at BlackRock, joins us around the table. Good morning.
Good morning.
It feels like we need to talk about the tech story to kick off the market chat this morning because that's what's driving the markets. A lot of this coming from perhaps the on-high stories, coming, of course, from the Microsoft $80 billion AI investment that they're talking about on Friday as well. But is tech still the place to be in 2025?
So we're about to publish our investment guide, investment directions for 2025. And one of the big themes we have there is in equities, this leaning into US equities further this year. And part of that is the tech story, but we do evolve it a little bit. So when we think about tech, when we think about AI as a big return and earning driver in 2024, in 2025, we're really looking at the breakout of that. So what are the themes that are set to benefit from AI breakout beyond just those mega cap names, looking at AI infrastructure and looking at AI beneficiaries. And then when we think about the equity story in the US and how we continue to lean into it, it's an evolution of that. So S&P Top 20, which is really leaning into the scale in US equities, is something we focus on. But we also look at the S&P equal weight. If you look at the earning projections for the S&P this year, we're looking at 2025 earning growth expectations of around 12 to 13% for both the S&P 500 as well as equal weight. So that breadth theme could have some legs.
But that breadth theme that you're talking about in the States, does that apply to right here in Europe as well? The translation factor when perhaps American tech could get very expensive on valuation basis or even on a currency basis in the face of a strong dollar. Does Europe have some catching up to do? Is there room to run for the ASMLs, the SAPs of Europe?
I mean, if you look at the chart that Guy showed us from Friday, that gap earlier, just about the immediate term. But then if you look at that spread between European equities and US equities on a 10-20-year basis, so even the very long term, you'll see that there's also a very big gap. The European equities were up around 9% in 24, S&P 500 US equities up 25%. So Europe did show positive performance, but it is lagging. There's no doubt about that. To answer the question, can that gap close? I think a lot of it lies in dispersion. At a broad index level, Europe could continue to struggle because of macro headwinds. So growth and inflation are not looking as positive as they are in the US. Part of that is seeing how the ECB is likely to continue cutting rates back to back when the Fed is not. But then the answer is really in dispersion because European equity dispersion is at the highest level since 2009. So there are opportunities in European equities. You just have to go and pick them. Where?
Let's talk about the regions of Europe rather than the sectors. Where do you find opportunities in Europe?
On a regional level, obviously, we've got the PMI final reads today, but on a regional level, we are seeing an interesting green shoot continuing to come through from some of the economies in Europe, in Italy, Spain, so in southern Europe. when the core, as we call it, German economy is still struggling a bit, especially that manufacturing powerhouse continues to be in somewhat of a stagnation. So that's on the regional. On the sector level, I think there's interesting opportunities in areas like luxury, but even there you have to look at dispersion. So luxury, but with stock picking hat on.
So 2025 maybe the year of the periphery in Europe. What about the UK? Is it actually in a good position given the potential trade war going on that, we've had Brexit and the UK is setting its own tariff policy?
So UK is a bit of a mixed bag. On the one hand, we're starting to see that growth impulse weaken. Now, obviously, that provides a tailwind from a central bank perspective because the market pricing for the BOE rates this year is not too dovish, so there's room for the BOE to deliver, which creates some opportunities in the gilts market. Now, on the equity side, one of the interesting charts on UK large caps, so FTSE 100, is that their trade vulnerability is actually quite limited. So the trade beta of UK large caps is one of the lowest trade betas compared to other developed market equity indices, which positions it well from a tariff and trade war perspective.
Give me another sneak preview into your outlook. If I am a little concerned about what is happening with US stocks and I'm looking for a diversifier, what is my diversifier?
So, yeah, that's a great plug because we actually dedicated a whole theme to the...
It's almost as if I'd read a little sneak preview.
Exactly. A diversifier theme. And I think there's diversifiers and there's return enhancers. So from a diversifier perspective, it's really looking at the market-neutral strategies, so looking at a sleeve in liquid alts, hedge funds. So that's one...
Not bonds.
Well, bonds are good for income. And one of the themes this year, as we look at the Fed pricing, which has come down quite a bit around rate cuts, so we have much more modest rate cuts priced in this year than last year. High rates for longer is a theme, and bonds are going to be a good source of income this year, as they were last year. But from a ballast perspective, we have to think a little bit harder on the diversifiers because that stock-bond correlation is unreliable. Look at what happened in the past 3 weeks for anyone who was around the holiday season. Stocks and bonds fell at the same time. So when we look at the diversifiers beyond bonds, we look at the liquid alts, the market-neutral strategies. We look at scarce assets like gold. Gold and silver had a very good year last year, 25%, 21% respectively. We expect that to continue to be in a positive light. We've started to see the investment community buy gold, and ETF flows have really started to pick up.
Should I be looking for diversifiers? Should I be worried? Is the risk growing that we are going to see a meaningful correction in US stocks? We didn't seem to have one last year in a big way. What does 2025 look like? Is there going to be greater volatility this year? How bumpy does 2025 look like? I haven't actually read that bit, so tell me which bit that comes in.
So in a typical fashion, I think there's two hands here, two arguments. So on the one hand, US stocks have been powered by good earnings last year, and we could still see positive earnings this year. In Q4 reporting season, which is about to begin, earnings expectations have come down. So the bar is low to clear. We saw that in Q3. We went into Q3 with depressed earning expectations of 3%, and the market managed to deliver 7% earning growth, and that provided a tailwind for US equities. And that could happen again. So that's the positive side. On the negative side, that soft landing pricing from equities is getting challenged. So we have this environment where the Fed is not going to be cutting.
By a hard landing or a no landing?
Well, we don't have signs of a hard landing per se. Macro indicators remain fairly constructive, especially for the US economy. And so that's reassuring. But you could still have those periods of choppy trading where you have markets having to get adjusted to higher inflation for longer and higher rates for longer.
So the probability of a hard landing that you just read out and the choppy trading, you said you can still make money on bonds. But if you're talking about an inflation uptick, why would anyone own bonds right now?
So if we look at the past couple of quarters, duration got hit, and we do remain cautious on duration in 2025. 2025 as we were in 2024. But it's also mattering where you own your bonds. So if you own the front end and the belly of the US Treasury curve, which are the segments that we like, you can still get good carry because the yields are relatively elevated and it's more stable than the back end where we're expecting higher term premium to be demanded by investors. And so that's one area. And then if you look at credit, for example, it held up decently well, also from a carry perspective, despite the hits in duration. So from an income, from a carry perspective, there are a lot of opportunities in bonds. And as our fundamental fixed income colleagues always highlight at BlackRock, you can get a good mix of high quality income without taking too much risk in today's fixed income market. And that, especially with an unconstrained strategy approach, is an opportunity.
Karim, great to see you. We'll look forward to reading the full report. Thank you very much indeed for coming and giving us an early preview. Karim Shadid, EMEA Investment Strategy Head over at BlackRock. Thank you very much indeed. Quick look at the core six, what's happening in terms of the centre of gravity here in Europe. You can see tech is up, luxury is tracking a little higher. Nestle is softening, continuing to soften, down by 0.5% this morning. Quite a decent drop in Novo Nordisk as well, so pharma under a little bit of pressure. Let's dig into the details of the European trade. We're 12 minutes in. What has Joe Easton got to tell us?
So we got some big moves in the chip stocks today, Guy. You mentioned that strength in tech. All of that seems to be coming through from the semiconductor stocks. Remember that story around Apple spending $80 billion potentially on data centres in the fiscal full year. That does seem to be the key driver. Also, that report of better-than-expected sales from Hon Hai, which puts together the phones for Apple and also some NVIDIA products. Those two elements of news, so really pushing those stocks higher. We're seeing some decent gains in those. Infineon up almost, well, up 4% now. And also ASML nearly the same in terms of the moves there. In terms of those drinks, that is a two-day story in the drinks makers. As Guy was mentioning, those stocks did fall on Friday. So even a little bit of a rebound coming through in Campari, very small, but most of the move was on Friday. Apart from Royal Unibrew, now this one actually does have a rating downgrade, so that seems to be the one on that. Barclays cutting that stock today. Then in terms of Alstom, we got some orders from the French company. They're talking about their Metro link and also some airport concessions as well, doing well for them. So the orders coming up nicely on that one, up 1.7%. for Alstom in terms of the stock. Analysts saying that looks pretty solid today. Then in terms of the ratings, analysts doing their best to keep us busy. There's the RBC one that we flagged earlier on Unilever. So that stock coming down 1.5%. Some decent downside on that stock according to RBC. Then Rolls-Royce gets a very rare downgrade after a massive rally for that stock. That's one of the best performers in London over the past couple of years. Downgraded at City. They say the valuation is too punchy, and that stock falling at 2.4% today. Decent move in that one. Finally, analysts at Bernstein have a massive note on European capital goods today. They've downgraded ABB in Switzerland, but they've upgraded Rexel, the wire products maker and supplier to construction. So that one gaining 2.7% in Paris. Bernstein has a big note. That'll be on the terminal soon. Keep an eye on those cap goods stocks today.
All right, Joe Easton from our equities team, we thank you. I mean, it's a sign of how quiet it is that the two biggest drags on the FTSE 100 today are those analyst downgrades for Rolls-Royce and Unilever. The FTSE 100, kind of the anomaly here, down 0.1%, whereas it's a sea of green for the rest of European equities.
Low chip sort of impact as well in London, which is a factor. Rolls has had an incredibly strong run. Maybe that's started to roll off a little bit, to excuse the pun. So you may be seeing an impact coming through there. Unilever's a heavyweight on the market, so some weakness coming through there. I think this is the first significant week that we are seeing. We are obviously going to see the closure for Jimmy Carter's funeral later on this week, so it's not a completely full week. But nevertheless, I still think people are trying to figure out exactly what the narrative is going to be. And I got to come back to what we talked about last week, which is I think we have to wait until the 20th until we start to get an idea of what really is happening here. I think we're just kind of playing around at the moment, looking for a narrative, looking for a sense of direction. I don't think there really is a clear one at the moment. And I think it'd be interesting. We're going to talk to Peter Tubowitz about this a little bit later on. Like, how quickly do we get clarity and the end of uncertainty?
Well, it's interesting that we're seeing this tech space as well, maybe perhaps the clearest space where we do have a little bit of that clarity. And I should mention, just as we were getting through the stocks to watch, Joe Easton did actually mention Apple's at $80 billion. I think he meant Microsoft, so just issuing a quick correction there. In the meantime, as we were chatting, we did get some inflation numbers coming out of, some PMI numbers coming out of Spain as well. December services rising to 57.3 versus 53.1 in November. A little bit of an expansionary.
Tourism is a really big factor at the moment. So you smile, because I know that you're a huge fan of Spanish tourism. But
I like to contribute.
Americans more broadly like to contribute. So Spain's been a really big beneficiary in some ways of the US exceptionalism story. American consumers are in great shape at the moment.
Sorry, Karim Shadid talking about that periphery story of 2025, which I'm sure you'll be all over, Kriti, but, you know, Spain really benefiting as you see the weakness in Germany and in the core.
It has, and I think it's really interesting. Tourism is 100% a really, really big part of it, but they've also really tried to reorient their economy to other parts of the world. So, for example, I'll just give you a figure here. 90 billion of their kind of revenue came from tourism. 100 billion came from other services. That includes financial services. That includes digital banking that they are now offering to the rest of the world. And that's where you can fold into the likes of the AI story a little bit, pushing away from manufacturing, trying to hedge against some of the maybe China reciprocity in terms of pork imports and tariffs, et cetera. I can go on and on. But I think what you need to know right now is that the services numbers, the PMI numbers, did come in pretty hot. The composite PMI rising to 56.8, 53.2 in November for that period. Some strength in the euro as we get those headlines. Coming up on the program, we're going to stick with a little bit of the tech story here. On High reports a sales beat as demand for AI infrastructure shows no sign of letting up. We're going to discuss what that means for the European chip sector next. Stick with us. This is Bloomberg.
Welcome back to the opening trade. We're 20 minutes into today's session, and you're looking at the Euro stocks 600 higher, 0.1%, just eking out gains. But really, it's the CAC 40 that's racing ahead, higher 0.6%. But the FTSE 100 there in the red this morning. We've talked about the China weakness. Maybe it's also because of a lack of tech names, and that is the tech names elsewhere, the likes of ASML, benefiting from the Honhai results. So let's dive into those. Honhai reporting better than expected quarterly results, boosted by stronger demand for AI infrastructure. We can get more now with our Asia technology reporter, Jane Lanhee Lee, who joins us from Taipei. Jane, good morning. Just break down these results for us from Honhai.
Right. Well, these are not really quarterly earnings reports, but Taiwan companies report monthly sales. And based on that, the fourth quarter sales was much better than expected. It's up 15% year on year versus 13% estimates by analysts. That was a bit of a surprise in a sense, because October and November sales were, grew by single digits. And then suddenly in December, we had like a 40% plus growth. And so that, I think, gives investors a bit of breathing room, because everybody's wondering how long this AI investment boom will last. So some good news. Plus, Honhai is saying that first quarter it's expecting significant growth. So hopefully some more good news for 2025.
In terms of the good news that could be coming, does it come from the server side of the equation? Is that really where the strength is going to be?
That's absolutely right. I mean, Honhai has long been known as the iPhone maker, the Apple supplier. And it said in its last earnings conference call that this year, the division that houses the AI server business would match the sales of the business division that houses the iPhone. So that makes that brings a lot of diversification for Honhai, which traditionally has been relying a lot on the Apple sales. And, we've even started to headline it as the NVIDIA AI server maker rather than just calling it the iPhone maker.
Well, that was the question I was going to ask you, Jane. This idea of kind of diversification away from the Apple Store. You mentioned even NVIDIA, but it kind of runs into the same issue at a time when it feels like tech companies everywhere, On-High included, Foxconn included, are really looking at things like cars, looking at infrastructure, looking at data centers. How is On-High diversifying?
Well, in addition to pushing big on the AI server business, it is trying to also get into the EV car making business. But that business has so far not had much traction. I'm waiting for a big customer name in the U.S. this year for their EV contract manufacturing business. That's not so far come. We've reported out also that there was interest from Honhai to have a tie-up with Nissan. It's so far backed away from that for now, as Nissan and Honda are having a tie-up. So it has been looking very actively to diversify its business away from just being the Apple manufacturer. It's succeeded so far, it seems, with the AI server business, but it's looking for other areas of revenue to diversify that revenue stream.
All right. Asia technology reporter Jane Lanhee Lee joining us this morning to break down those On-High numbers. We thank you so much. Of course, already showing up in some of the European price action as well. You're seeing the likes of ASML, SAP, and of course the others also higher this morning. Let's go to another sector. Oil steadying near its highest level in almost 3 months. Saudi Arabia raised its official prices more than expected. Bloomberg's Stephen Sebrzynski is all over the story. Stephen, walk us through these price hikes.
Yeah, so the price increase for Asia is Arab's light crude, which is the main form of Saudi Arabian oil, going to the biggest customers in Asia. They hiked it by about the equivalent of 60 cents a barrel. The market was expecting a 10 cent hike. So this is a bit higher than was expected. There could be a few reasons for this, one of which physical supply coming out of Russia and Iran has been tightened either through sanctions and crackdown on the shadow fleet. At the same time, perhaps there's a bit of a rosier picture that Saudi Arabia is seeing from Asian customers as they look to replace those flows potentially lost from both Iran and Russia. That could be one factor there, but it does show sort of a counter. The oil market is not as straightforward as you would think. I think going into this year, everyone was talking about an oversupply weakness, how the market is not really seeing strong demand out of China, and how the U.S. is pumping output quite strongly, and OPEC Plus is waiting, holding off to really add more barrels into the market and unwind their production cuts. But this does show that there are bright shoots and there are bright spots, and potentially the market isn't as oversupplied as initially seen, as you can see from this Saudi Arabia increase.
Steve, very quickly, it's cold outside here in Europe. Gas seems to be going out of the door, out of storage very fast. Are we going to have a problem? Just briefly.
Okay, so storage has dropped between the peak to today by the highest level since 2018. That's an alarming number. Gas prices are higher than normal. They've jumped, but they're not at 2022 levels. We're not in a crisis per se. We're expecting higher prices, but don't expect a 2022 level jump in gas prices.
Stephen, thank you very much indeed. So we're going to go from gas to steel next. This is Bloomberg.
The amount of steel that we're capable of making in this country today, we made 30 years ago. There's been a lot of technology changes. There is a lot of changes in the way we do the work, but there's also lots of changes in their equipment and in the materials and how we make steel. So we're very capable of making the steel that we need in this country. Actually, the demand is higher than our capacity.
David McCall, the United Steelworkers president, speaking there to our very own Romaine Bostic and Alex Steele over in the States. This is all in the context of that Nippon Steel offer for U.S. Steel that got completely nixed by President Joe Biden on Friday. Now, this is crucial because this really brings up a lot of questions of national security, this America First agenda. But for a moment, I want to focus in on how steel actually is produced around the world. The major player is China, whereas U.S. Steel used to be the dominant player, the first billion-dollar company in the world, creating the steel for bridges, skyscrapers, etc. It is now China that's very much in the driver's seat. Under that's India, Japan, then the United States. And even within the United States' steel capacity, you are still only seeing U.S. Steel as one of the minor players in that story, which brings us to the question of why this is such a big national security issue and some mixed opinions from within Biden's inner circle about what that actually looks like. Fears of repercussion, fears of consequences, of fallout, of creating those national security concerns around Japan, a major ally. Let me just walk you through some of the narrative. Janet Yellen, for example, the U.S. Treasury Secretary, reporting that this could have an effect on foreign direct investment from Japan into the United States. Rahm Emanuel, the U.S. ambassador to Japan, of course, a long-known politician over in the States as well, talking about defense fallout as well. What does this mean as Japan is positioned to help with the U.S. naval system in the South China Sea and specifically as a key ally against China as well? But then you have the other side of the coin. Catherine Tai and Jennifer Granholm, the U.S. Trade Representative and Energy Secretary, respectively, also saying this is absolutely crucial for the energy security story, talking about keeping that production capacity in-house in the United States. But I think the key theme here, does that America First agenda actually mean for the global fallout? Let's bring in a true expert on that very question. We're joined now in the studio by Peter Trubowitz, Professor of International Relations and Director of the Phelan U.S. Center at the London School of Economics. Peter, pleasure to have you on the program.
Great to be here.
Let's start with that very question, this America First agenda, which we've seen through Nippon Steel, which we're going to see later this week in the TikTok appeals hearing for the Supreme Court. How does this have a ripple effect to the rest of the world?
Well, I think one of the implications of all this is that friendshoring has its limits. This is something the Biden administration has stressed, the need to work very closely with America's allies, and this decision really cuts the other way. It erodes or undermines or tests the credibility of that commitment and that policy. And, you know, I mean, it's quite interesting that it was so divisive inside the administration where there really were two camps. And at the end of the day, I think Biden, who has had longstanding ties with labor, just couldn't bring himself to embrace a policy that would essentially concede or give away one of the kind of symbols of American labor over the course of the 20th century.
But Peter, at the end of the day, it is still just a symbol. U.S. Steel hasn't actually been doing a lot. That's just one example. But taking it with a kind of big picture lens, if we can, Donald Trump is about to be the new president. He shares a lot of the same feelings about these national security stories as Joe Biden does. How does the rest of the world prepare if this kind of question of alliances, even in the corporate space, are under threat?
So I think what the rest of the world is doing is taking a deep breath. They recognize that Biden essentially heard Trump's footsteps and that this is the direction of travel right now in the United States. It creates an opening for China as well, really, to start to try to work or peel off, to some extent, America's allies. There's a great deal of concern about Trump, not only in Europe, but in Asia. And Xi Jinping, who's got his own economic problems and is going to be worried about the impact of, Trump's tariffs on China if he makes good, nevertheless if Trump makes good on him, nevertheless we'll see an opportunity to double down on globalization with the rest of the world, and I think, ironically, with America's allies.
Well, speaking of China, we've got the UK Chancellor of the Exchequer, Rachel Reeves, and the Bank of England Governor, Andrew Bailey, off to Beijing this week, just ahead of Trump's inauguration. Is that wise?
I think probably, because it's unclear where Trump is going to land with respect to the UK. Given the direction of travel or rhetoric that's coming out of Mar-a-Lago and Elon Musk and, the kind of the coterie of Trump trade advisors, it doesn't look like the UK is going to get a trade deal with the United States anytime soon.
But how would you handle Musk if you were Keir Starmer?
Carefully. Musk is a problem not only for him, but for the German leadership and so forth. Musk is trying to expand his remit. He's apparently a problem for Nigel Farage as well. So, Musk is an issue, I think, for foreign leaders because He represents part of, he's not a clear American firster, but he nevertheless are part of the kind of strong MAGA coalition inside, under Trump's umbrella. He represents the alternative wing, I think, which is wealthy tech corporate types who are not going to line up behind, Steve Bannon's position, let's say, and on immigration or on tax cuts. Well, on tax cuts they will, but not necessarily on China.
Peter, when are we going to get clarity on the Trump agenda? Nobody seems to know really what that is going to look like at this point. Does he? And are we going to get it on the 20th?
I think Trump right now is trying to figure out which direction to go. So there's talk of going either with two bills. So Trump's agenda basically consists of two parts. The border, fixing the border, in quotes, and secondly, tax cuts, or extending the Trump tax cuts from 2017. And initially, the idea was to separate these two, to go for the border quickly and fixing the border because there was no opposition inside the Republican Party on that particular question. But given the vote over the Speaker, the contest over the Speaker, and the contest that occurred a little over 2 weeks ago over keeping the government open, what it's underscored is that Trump won an impressive victory, but he has no mandate. He had no real coattails from that election. He's working with very thin margins in the House, the thinnest almost on record historically in the United States. There's one exception to it. And with relatively thin margins in the Senate. So the idea is if you put the two bills together, he will be able to create more negotiating room to construct some type of deal. The downside of doing that is it extends everything. The negotiating out the extension of the tax cuts is going to take time. And so he will be lucky if he has a bill by April. This is past the normal 100 days. You celebrate and so forth. Okay. It could go beyond that into the summer. It also gives those holdouts in the House the kind of, the tough on the deficit hawks leverage over Trump going forward.
So we have to wait potentially until April before we get those two aspects.
If he puts them together.
If he puts them both together. He could do them separately. Maybe he goes through immigration first and gets an earlier win, which may appeal.
Momentum, right.
And the momentum, as you say. If he does decide to put them together, he doesn't need the House to do tariffs.
Right.
He can do that on his own. Are tariffs an end in themselves for Trump? Because this is what the rest of the world's trying to figure out. Is it a negotiating tactic? Does he want something else? Is there a means to an end here? Are they a means to an end? Is there a bigger objective? What do you think he's going to do on day one with tariffs? How quickly are we going to see this narrative unfolding?
So I think the answer to your question is kind of all of the above. That is, Trump has been talking about tariffs since the 1990s.
Sure.
So this is something he's deeply committed to. That and getting NATO allies to, spend a bit more money. So those are two very consistent, principled positions. But I think kind of more generally speaking, I think what Trump believes is that America's greatest asset is its market. It's huge. Everybody wants access. Why not leverage it? That's his position. And that's something that American presidents did not do, at least in a kind of brazen way in the past, or at least not in the recent past in modern American history. And so I would not be at all surprised if Trump on day one imposes additional tariffs, let's say, on China and other countries.
Europe?
But he has, possible. But he has many things he can do. There are things he can do on the border on day one that are more like kind of show, and I would not be surprised to see that. He will roll back a number of the things that Biden has pushed through an executive order. So I expect we'll see on day one a flurry of activity, some of it, maybe much of it, very symbolic. But the tariff stuff is not symbolic.
Yeah.
It hurts.
For the international agenda, Mike Johnson seems to have survived this vote on Friday now.
Yeah.
What does Trump need Congress for?
He definitely needs Congress to be able to extend his tax cuts. And if he really wants to make good on his pledge about the border and fixing the border, he needs Congress.
But those are very much domestic stories. For the international agenda, for the tariff story, for restrictions, for banning on the stock exchange, those kind of things.
But this is why it's important, because if Trump cannot pass legislation, then Trump looks weak internationally. It means that he cannot carry Americans with him. It means that there is enough resistance, ironically, within his own caucus, within the Republican conference. So those are important. And, you know, for Trump, I think this was one of the problems with Trump's first term. When you look back at it, he passed very little programmatic legislation. The big thing was the tax cut. It took him almost a year to be able to get that through. That sends signals to internationally that there's a limit to the president's kind of authority, power, and clout.
But how limited is he in his relationship with Musk? You've got people joking about Musk being the president-elect.
Yeah, so, you know, I think the question there is if... I think that's probably one narrative that Musk doesn't want. You know, because Trump doesn't like competition. I think this is, you know, for airtime, I think this is complicated for him, you know, where Musk is very valuable to him in many ways, it seems. Certainly he bankrolled, you know, in a significant way his election. You know, Musk has a megaphone in X. Yep. And he's the richest guy in the world. So, and to Trump, I think that means something. I mean, Trump looks like he's a pauper compared to Musk. So, but you know, the problem is that Musk. I mean, we've already seen over the visa question, MAGA firsters, you know, true believers, push back against Musk and go after him on X and other platforms. And so there's a real potential for conflict and division inside the Trump administration over immigration and I think on the question of China. I don't think Musk is where Trump is on the question of tariffs on China.
Do you think Musk's support for right-wing parties in Europe is backed by Donald Trump?
The way I view this is Musk is following up on the ripple effects, the wave, really, that Trump's election caused in Europe. I mean, Trump's election stoked the right wing in Europe. You know, Viktor Orban called it Trump's election as an accelerator to history. And I think what Musk is doing is playing on that, is following up on that by stoking or supporting right-wingers, whether it's AfD in Germany or, you know, Reform UK, perhaps without Nigel Farage in the UK, right? So, you know, hey.
It's amazing to watch what is happening here.
Indeed.
Peter, great to see you. We'll have you back very shortly. Obviously, the next few days are going to be interesting as we build up to the inauguration of Donald Trump. Peter Trubowitz, Professor of International Relations at the London School of Economics. Let's turn our attention back to the United States. Mourners have been paying their final respects to former U.S. President Jimmy Carter as part of a 6-day state funeral. He is lying in repose at the Carter Presidential Center in Atlanta, Georgia. You're looking at live pictures now. Carter will then be flown to Washington on Tuesday, where he will lie in state at the Capitol before a funeral service that will take place on Thursday. The former president died last month, age 100.
I would not want to see further slowing in the labor market. So while we do absolutely have to continue to get inflation down to our 2% target, we have to be resolute about that. We have to do it in a thoughtful manner so that we can also support the full employment.
That was, of course, San Francisco Fed President Mary Daly, no longer a voter. I think it's just worth referencing that. So the Fed controls the front end. The back end, that's a completely different story. The shape of the US curve has been changing significantly over the last few months. And in the last hour, the US 30-year has climbed to its highest level. We're talking about the yield here since November 2023. How significant is this? The shape of the curve is changing. Valerie Teitel is here to talk to us about what happens next. And?
Look, it's funny to see this move in the Treasury market happen, and my concern necessarily isn't anything about U.S. related. It's about the global effects of U.S. yields being higher. If you think about the U.K., for example, their gilt market very much swings around with the Treasury market, and they've had 2 months back-to-back of no growth. Meanwhile, their nominal interest rates are above 5%, right?
Transmission doesn't work because the Bank of England can be cutting rates. Doesn't matter.
Yeah, it doesn't matter if the U.S. economy is outperforming, especially outperforming on a global basis. You know, the worry now is these indebted global economies who aren't growing. Think about Europe, for example. In France and Germany, it's igniting political turmoil. And then you have here in the U.K. the same kind of story. So it's interesting to see this steepening of the curve in Treasury yields, all about fundamentally a good story in the U.S., right? There are upside risks now to growth, which is very much what the long end seems to be reacting to. You've got a U.S. economy still going strong, some further government spending coming its way, increasing the supply of treasuries. But these heightened treasury yields really, you know, over the course of this year could pose a problem to other economies who just aren't growing.
So as we look at all this U.S. eco data out this week, does it buttress the idea of U.S. exceptionalism?
Look, we'll see, right? I think many of us have gotten very excited about the prospect of a U.S. economy running above trend this year. Maybe we're vulnerable to the first data point, which shows something very different, right? If we get a weak payroll report on Friday, or if we get ISM services coming in weak, maybe we'll see this vulnerability play out. You know, there have been a lot of people piling into dollar longs. Perhaps at the first sight of some data that isn't so hot, we see a outside reaction in the market, perhaps maybe see a bout of dollar weakness, which I'm sure many around the globe will be happy to see. But I think that's where the vulnerability lies here, this positivity around the U.S. Exceptionalism, the U.S. growth versus around the world.
Does the deficit matter at all anymore? And we're talking about kind of extraordinary measures that might get kicked in this week or next week. Does that actively change the funding picture?
So it doesn't necessarily matter in a negative way now because the U.S. is still growing, right? You think about how nominal interest rates and nominal growth, right? If you're growing more than your average interest rate, then your debt pile doesn't increase. So as long as the U.S. continues to grow strong, I think the bond vigilantes might not be the first to attack the Treasury market. What they will have their eye on is other economies around the world who aren't growing above their nominal interest rate, which I mentioned here in the UK. We're going to have that problem over in Europe as well. So, for now, the growing deficit in the U.S., as long as this U.S. economy holds up strong, I think the worries over let's say the paying your coupons on your debt, those kind of worries will sit at bay for now.
All right, Bloomberg's Valerie Teitel, we thank you. And let's dive into some of that data that we'll get from Europe. German inflation numbers due out at 1 p.m. London time, and that data expected to show an uptick. We can get the details now from Bloomberg's Alex Weber. Alex, what are we expecting from these numbers as we look at lots of inflation reads from Europe this week?
Exactly. So for the German number today, the consensus for an uptick to 2.6%. That's up from 2.4% in November. Core inflation, we're not going to get a number with the early estimate from the German Statistics Office, but analysts expect it to have remained broadly stable. So this is all on the back of rising energy costs. Remember that in the fall of last year, we saw really low inflation figures because of statistical effects of huge volatility in energy costs over recent years. That effect has been reversing for the last few months, and this is going to be a continuation of that. So on the one hand, nothing to be immediately worried about as a central banker, but also shows that the task of getting inflation back to the target is not yet complete.
Talk to me about the inflation picture in Germany beyond December. What does the data look like this year? As you look out, what does the picture develop into?
So first of all, at the beginning of the year is always a kind of a critical period because prices reset, a lot of contracts are renegotiated, and there's also political measures like the Germany-wide transport ticket that was introduced a few years ago has been having a big effect on inflation, and the price of that is going to rise in January. So we're not gonna see an immediate fall in inflation. For the Bundesbank also expects inflation to average only 2.4% over the whole year, so not a massive progress from last year's 2.5%. So for the euro area, the ECB expects to hit the inflation target of 2% at the end of this year. And this could also be in the store for Germany, maybe a bit later in 2026.
Very quickly, there's been a narrative in this market about whether or not you import inflation from the States, whether you import deflation from China. Where does Europe stand in that tug of war?
That's really an open question at this point. It totally depends on what kind of tariffs are introduced, and then also what does it mean for China, just to explain. So if the US shuts itself off from Chinese imports and all of those goods are redirected to Europe, then that could really have a downward impact on prices here. So that would be hugely disinflationary. On the other hand, you could also see a scenario where the countermeasures taken by the EU increase prices in the Eurozone. So it's really a big open question that the ECB will have to look at this year. It's really too early to tell. And then also the depreciation of the euro could play into this. If the euro depreciates towards parity with the dollar, even below, that could increase import prices and also have an upward impact on inflation here.
103 handle on Eurodollar as we speak. Bloomberg's Alex Weber in Frankfurt. We thank you so much for joining the program. Let's get a quick check on some of the market movers here. Of course, tech seems to be a big theme, a double whammy or a double boost perhaps from the on-high story over in Asia, plus the $80 billion that Microsoft has pledged when it comes to the fiscal spend of 2025. So you are seeing some major movers to the upside here. ASML is just one, SAP is another, but you are seeing it across the chip sector, Guy. So a bit about defence stocks. The defence stocks have had a very strong run, and many anticipate that may actually continue into 2025. The stocks, though, are showing a little bit of sign of weakness, as you can see this morning. It's interesting, Joe was flagging this a little bit earlier on. There's a note out from Citi. The prospect of peace in Ukraine could derail sector valuation, Citi says. If this happens, we would regard it as a significant buying opportunity. There is potentially significant defence spending coming through as Europe retools. Is that going to be impacting these kinds of names? That story is certainly one that's going to develop throughout 2025 as Donald Trump enters the White House. That wraps things up this Monday. Francine is back. The Pulse is next. This is Bloomberg.